Hello guys, welcome back to AWM FX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully you guys out there are doing great, earning a lot of money from the market, and of course taking great care of your health. Alright, since the COVID, the pandemic is getting lesser and lesser. So everyone, hopefully you guys are taking good care of your health, alright? Okay, and your family too. So today I'm going to share a very, very important lesson with you guys. It's all about multi-time frame analysis and the importance of multi-time frame analysis, right? So basically, over here, I'm using TradingView, as you can see, all right? It is a bit different from MetaTrader. I have a lot of time frame, all right? A lot of funny time frame. So I won't be touching the monthly time frame because the monthly time frame, once you have a setup there, it want to take years, all right, for it to form. So I'm not going to touch it. So basically, I will only use starting from the weekly. So weekly, daily, and H4 is what I consider as a high time frame. All right, H4, daily, and weekly, high time frame. So on the lower time frame, I consider the M30, M15, and M5 as a lower time frame. All right, M30, M15, M5. Sometimes on go only, go, I will use M3, all right, as my lower time frame. But I will never ever consider 1 minute as my time frame. One of the reason is that because sometimes the zone is so small, I have only two problems. One is that either the trade won't be triggered in the zone because of spread, or second is that if it's triggered, it will get stopped out very easily because the spread, because of the spread also. So 1M is definitely no. So if you pay attention, I have left out one common time frame. That is the H1. All right, H1. So for me, H1 is considered high time frame and lower time frame. All right, high and low, depending on the pair that you trade. So if you are trading currency pair, all right, such as the CAD/CHF, all right, like AUD, NZD, Euro, GBP, all those slow moving pair, H1 is considered low time frame. All right, low time frame. So if you are trading the fast moving pair such as the GBP JPY, GBP AUD, Euro JPY, or maybe Gold XAU USD, so H1 is considered high time frame. All right, get that? All right, this is of course is not by other, it's by myself. I define it myself, based on the way I analyze. So why is it you need multi time frame analysis? All right, I give you a few good reasons. So if you guys still remember, we have a kind of sideway called the SBR, where we have a support and then a resistance. All right, you still remember that. Then after that, the price might reject from this area. Sorry, the price might reject from this area. All right, if you still remember that clearly. So the importance of multi time frame is that because new traders, they might watch one or two of my videos or other people YouTube videos and they think that they know everything. Then they will jump into M30 because they're eager to get into a trade. All right, eager to get into trade. Just give you an example. And the problem is that most of them, they don't have a proper trading platform. What I mean by that is that a computer or laptop or maybe a tablet, they might trade using just a phone. So using a phone, your view is maybe like this screen, this box over here. So it's very, very limited. You can't look to the left or you have a lot of missing information. So it's very, very dangerous, especially if you are trading in the area such as this area. All right. So if I have a SPR set up over here, I won't even consider to trade at all. Okay, I won't consider to get a sell trade over here, right? You know why? I give you a reason, very simple. Why I have this green zone? Because when I switch it to daily, this is a daily demand zone. Means that there is always a tendency the price will react react or reject from this area. So if you keep selling in this area, you are just like holding a hot pot, right? You get yourself burned, right? Don't ever trade in a danger zone. This is what I call it, danger zone, right? Instead of selling, you might consider of getting a buy trade. You understand? Not when you have a demand zone, think about a buy. So when you're on a supply zone, think of a sell, right? So this is one of the reasons you need multi-time frame analysis. So another reason I give it to you is that previously I've shared, actually, if some of you know, I'm doing a mentorship with a group of guys, all right? So I did daily analysis with them every day, especially on Go, all right? Because I love Go, I follow Go, I know. So the last few days or last week, I told them to take note on this zone over here, right? This supply zone. And by the way I define my supply and demand zone is a bit different. I won't say weird, a bit different for other people. So you might catch up with some of my videos explaining on that way of doing the supply and demand. So I told them this is a very dangerous zone on H4. So if you trade based on just supply and demand, it won't work. It will not work. So you need to pair it up with what we call as setup. Setup. Right? So example over here, when I put a line behind this box, all right, what we get is that there is a lot of rejection. You can see it, a lot of rejection all the way, along the way, rejection. Right? Agree? Agree. You have to agree with me because it's really rejection. Not only that, all right, what we have over here is that we have another setup. All right, I call it a QMTR. All right, I call it a QMTR. So what is a QMTR? Right, in my native language, it's called Quasimodo Tag Respect. All right, or in English, I translate is a Quasimodo non-respect. Right, so example over here is that we have some movement. All right, we have some support movement. Then suddenly there is a price that break the support. All right, the next second, what happens was that the price breaking the high. So what we have over here is a Quasimodo level, QML, right? QML. I'm going to change the other color, easier to see. We have a QML over here, right? So we expect, as a normal traditional QML trader, we expect the price to drop into this zone and reject or react, whatever you want it to be. But instead of doing this, the price drop, make a drop, base drop before continue going down. Right, ignoring the QML level. All right, so a lot of you might be heartbroken or might be sad. Hey, how come the QML does not work? QML does not work. It's a bullshit of QML. No, no, no. Actually, it's not. It's just that it gives you another chance. All right. Every time I tell my student, whenever the God close the door, He'll always leave another window open for you. So don't worry about it. So over here, there is a possible entry. Means that the price came back to this area, it will drop. All right, sorry. Sorry for that. It will drop. Looks very, very weird. Right? It will drop. So there is a tendency of this trade, and it will give you a very high chance. So basically, what we have here is exactly the same like what I've drawn. All right, we have a QML. The price break the structure. Break the structure, and then we came back to this area. Instead of rejecting, it make a drop base drop. Right? So important, very important is that this drop base drop. Sometimes it is not as a zone. Sometimes it may looks like a double maru or a doji king. All right, double maru king or doji king. But important is that you need to switch to another time frame lower to get the zone correct. Means that there must be a candle that indicating a zone, all right, not the king anymore. So until this stage, hopefully you guys are clear, all right? So we're going to very, very deep. So now we have solved one problem, all right? We know how to enter. But this gives us another big problem, all right? I told you guys this is higher time frame. For me, it's higher time frame. H4. The zone itself is around 50 to 60 pips. 66 pips are you going to take this trade? Ask yourself, are you going to take this trade? This is extremely high zone of stop loss, right? So that is always another way of doing things, right? So what we do is that we switch to small time frame when the price reach this area, all right? When the price reach this area, and the price actually presented us a 3 drive at the last leg, right? This is the 3 drive at the last leg, okay? I've explained this setup also. All right, if you're able to enter uh on the spot, all right, instant entry on the top there, good for you. Your stop loss might be just let me change the color a bit, all right? Your stop loss might be just should be lower, 22 pips, all right, instead of the 66 pips, all right, it's 1/3. So if you're unable to enter this kind of trade, don't worry, don't worry. All right, we go deep into the structure, all right, the market structure. You can see the price actually created low, high, and then low, higher high, higher low, and then the ultimate high high over here before this red candle that breaks everything. All right. So once it broke everything outside of the zone, means that there is a chance the price is continue dropping. But the usually price do not drop in a linear way, means that one straight line. It will keep having a lot of pullbacks, 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 especially the first drop. Listen here, especially the first drop, because there is a lot of pending orders on top of that. They need to, the big players, they need to mitigate, they need to consume every order there before the drop, right? So there is a chance to enter here, right? So now we are M30. So what is lower than M30? M15, M5, and M3. I told you M3 for me, I usually trade using gold. All right. So I switch to M3. So what I see over here. All right. Some of you may recognize it. Some of you don't. All right. It's okay. I do not mind. All right. Some of you don't. It's okay. So if you look at it properly, we have a setup over here. What setup? QMTR again. Can you see? High, low, high, 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 low, price break, and then it reacted a bit before continue going down. So we have another QMTR over here, exactly like the H4 just now. Exactly like the H4, the big zone, the QMTR over here. So now this small zone, we have the QMTR also, right? We have a QMTR. So how do you enter this trade? At the break of the QML, you can see there's a double maru, right? So means that this serves as your entry point. This serves as your entry point. But the problem here, I always tell you a lot of problem, and we need to solve this problem, right, in order for us to be successful in trading. The zone is too small, extremely small, all right, less than a pip, all right, less than a pip. So what you do is that we usually place our stop loss at the entry area at the structure high in this case. All right, this is structure high. If you do not know, I cannot say anything. This is high, low, lower high, lower low. Break the structure high over here. So this is my entry point. And the price came back, enter the trade, and then drop, continue going down. All right, so this is nicely done. So the next thing we'll talk about is how you're going to exit the trade. First of all, I told you guys, this is a strong demand zone. So in order for you to exit the trade, I usually don't go deep into the zone. I will have a few pips above. And exactly here, we have a previous low, right, which serve as a support. And price sometimes do have tendency of rejecting over here. I won't be able to catch it to the lowest point. No, I can tell you exactly. I won't be able. If I'm able to do that, I can buy Lamborghini very, very fast. But of course, hopefully one day I'm going to buy one, but not that fast. I won't be able to know where the price will stop and reverse at that point, right? So I usually will take my profit somewhere, right, which is good enough for me. So Why you need multi-time frame, another reason is that you can see the difference, right? If I enter using the H4 zone over here, right? My take profit zone is over here. My risk reward ratio, right? My risk reward ratio is 1 to 6, which is actually very, very good, right? You compare with other method that you have used before previously. I tell you, it's very good. For me, when I first started trading, whenever I get risk 1 and then reward 1.5, I'll be over the moon. But now different, right? Now it'll be different. So 1 to 6 is actually very good. But if we have a sniper entry or precise entry, okay, such as I don't talk about the higher point, we talk about the second entry. So what we will get is this, all right? This is my risk, right? Agree, right? My risk. An exact area of my taking profit. I will have 1 to 19. Compared to 1 to 6, I have 1 to 19. So you can see the difference of having the advantage of multi-time frame analysis, right? It will not only prevent you from getting a wrong trade in the danger zone, right? But it will also give you a good sniper entry, all right, or precise entry, which you will get a good risk reward ratio and can able to grow your account very, 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 very fast. All right. So that's all for today. So if you guys like the video that I did for you, please do give me a like and subscribe to the channel. All right, I know that you appreciate, so that I know that you appreciate my videos, and I'll make more and more informative videos such as this to you guys for free. You can able to watch it in YouTube. All right, that's all for today. So see you guys next time. Bye.